and welcome to another episode of Taf Hub. I'm here today with my co-hosts, Mariama Koli.
Yes.
So Mariama, you're welcome.
Thank you. Thank you, Mr. Njai. And as we are still talking about the banks and its important role that it's playing in real estate, we have another important guest here, Mr. Omar Mbub. Welcome on the Taf Hub.
Mr. Mbub is the head of corporate banking at Trust Bank Limited. And I will just allow Mr. Mbub to introduce himself. And we will not mind if you talk about your bank a bit. We will not charge you for the marketing. So, Mr. Mbub, you're welcome.
Yeah, thank you very much, Uncle Taf, for inviting me to your program, Taf Hub, which I have been keenly following. I think you guys have been doing a great job.
Thank you.
On this program. And thank you for the offer, too, for me to talk about the very institution I'm from and the institution that made me who I am today. Important to say, Trust Bank is one of the largest or biggest banks in the Gambia, and then we pride ourselves by saying we are proudly Gambian. Just to give a brief background of the fact that the bank, the Gambia Commercial and Development Bank, was more or less from the excesses of the seed expectations. And then we moved from there to Meridian Bank and then to Trust Bank in 1997 to date, which is majority owned by a Gambian and almost always 100% managed by Gambians. So good to talk. We are one of the biggest partners in the development sector in terms of also the mortgage market. So I think it's in order that we can move and talk to the people about our important roles and how we can partner. So good to be on Taf Hub.
Now, can you tell us a brief background on your journey and your experience?
Great. I think personally, first I'll start by saying I started, I'm a chartered accountant. I'm a fellow actually of the Institute of Chartered Accountants, UK. I spend most of my time practicing as an accountant in the banks. I started as a cashier at Trust Bank in 1999.
Wow.
And I rose through the ranks. I get my qualifications to become the head of corporate banking today. So it's been almost 23 years of service. I've not worked for any other institution. So from school, I went straight to Trust Bank, and that's where I am still. Yes, as an institution, yeah, we, as I said, I had said this before probably on a TAF conference program in 2018, you know, when really we were looking at the role of the banks in the development of the housing market. You know, so I made it quite clear that you can have a bank-led program, or you can have a developer boost program. But what we've seen in the Gambia, as I said, I will always emphasize this, was a developer boost program. Mr. Mustafa Njai traveled along the length and breadth of most of the West African countries trying to have this dream of his million homes, and then said, I've done this successfully in Nigeria, why not Gambia? So his team were very, you know, fundamental, and were very, really exertive in terms of leading a way for the establishment of a mortgage product. So I worked with his team then in 2000, I think 18, 19, to ensure that really we have a mortgage, home mortgage loan product being launched. And in consultation with the regulators, we were able to come up with a mortgage product that we thought it was a good timing then, because banks have always had this challenge of the supply side of the relatively longer term deposits that they will need to really put in relatively longer term mortgage loans like we are having right now. So it was a very good process. It was developer boost, and here we are now. At least three banks are actually engaged in the mortgage market, and I think it's contributing really well towards what we are doing. So thanks to Mr. Mustafa Njai here and his experience in the sub-region, and the fact that we could have been more innovative as banks to come up with all this. We know it was there, But he was really pushing the agenda, and today everybody is benefiting from that. So thank you, Mr. Jai.
Well, thank you. But let me take also on that, Mr. Moop. That's on the mortgage. You spoke on the mortgage side,
Yeah.
you know, of financing
Yeah.
the real estate sector. Obviously, there are other financial requirements in the sector.
Yeah.
For example, construction finance and any other that you can elaborate on. How do you see banks in the Gambia, in general, not only your bank, you know, their involvement in the real estate sector? You already spoke about, as I said, the mortgage product. So now we're seeing banks offering mortgages. You know, but how about other financial products that you can offer within the sector?
Yeah. Great. I think, first of all, I would like to look at it holistically. We have about 12 banks, maybe 11 commercial and an Islamic development bank. But the kind of banks we have do not necessarily represent the whole gamut of banks that you need in a properly functioning economy. What we have are just commercial banks. And then commercial banks, as I always say, they are meant for trade finance. If you look at the structure of the distribution of credit, in terms of, it changes from one sector to another. At some point with the new reforms, you can see there was a bigger concentration on the hotel industry trying to improve, for instance, the quality of the beds. There were also, it has always been more into the distributive trade. That is relatively short term because of the commercial nature of what we do. But we don't have a development bank that fits into the relatively medium and longer term structure of financing that you will have. Even also within the commercial banks, you do not necessarily have what we call the longer term funds. So what banks are doing now to get into the mortgage market is basically taking leverage of the core deposits that we think, you know, it's only in the case of a bank run that you will have somebody coming up to take those deposits. You know, other than that, we've really looked at that and we come up with port sizes. You know, for the bank that I work for, Trust Bank, we come up with a port size of 100 million and commit that to say we want to put this into the mortgage market. But overall, construction finance, we've also looked at the other aspects of the need to really move from the shorter term nature of the overdrafts that will require and put so much pressure on the borrower to come back and pay interest, pay principal within a time, and then we insist on cleaning up and all those other things. So the structure of the nature of the kind of product that you are coming up. If you're into construction finance, you need minimum 5 years, for instance. I'm just giving an example, depending on what kind of structure you are coming up with, whether you are building a factory or you are building a commercial letting properties, you're building a hotel, there will be payment periods. So, or at least there will be time when you check that there will be an interim period, that's the construction period to put up the structure, to the completion time that it will begin to generate revenues that will be able to pay this debt, whether in the form of rent received or in the form of savings from rent paid before, or even, you know, in the form of excess to requirement rentage paid. So all this time, all these things will require at least between 3 to 5 years. So what banks have done, even though on the supply side of their deposits, they may not necessarily have the longer term funds that exactly matches the funding requirement you will have from the construction funding side. We have a critical core of our deposits that, come what may, we know people, unless there is a bank run, we've not heard of one so far, and then we hope it doesn't happen. You know, so we can really look at our deposits and say these are relatively longer term, even though they are in short-term funds. They've been with us for the past 5 years, and we know it doesn't matter what the demand for withdrawals are. Deposits have never gone, in fact, 10% below this amount. You know, so those are the deposits we try to now come up with kind of a pseudo-development approach, which is trying to put those into the relatively medium and longer term funds. So that we can have loans that will go between 5 to 7 years and probably, you know, best case scenario up to 10 years in the case of the mortgages in housing.
Now, the real estate sector in the Gambia has progressed in the past few years. How do you see the development and what benefits does it have for the financial institutions in the country?
Yeah. I think it is very, it has developed rapidly. People believe, in fact, it has, for the past decade, we've seen more than 50% by increasing it. You know, likely, if you given the background, social security or government used to be the main supplier of this real estate and all these other things until Mr. Mustafa Njai and now the entire gamut of the real estate sector, you know, come into this play. But it was mainly social security in the form of estate developments. You will remember the Bakuta estate. I think that was the first one. Mr. Njai will remember how cheap that was. And then, you know, compared to current times, maybe if it is inflation adjusted, it will still come to some level, but it was quite cheap. Getting into the housing estate, the Kanifing housing estate and industrial estate, of course, as well as then you have the Brusubis, then you have the Tujereng and the Jabans, things like that. You know, but we've seen private sector coming into play. Now, what that happens, it creates the investment avenues for the, you know, for the banks, for the financial institutions as well, because the market was so narrow. We were mainly into distributive trade of trade finance, letters of credit, bringing food and food items or the commodities into the country. But really looking at something in the real sector that could be of multifaceted benefits to the entire population. The financial institutions have another avenue to really bank the unbanked, probably somewhere where you know, these products and services were not available. We cannot mobilize all this liquidity from the market without finding a market or finding investment avenues where we can put it. You know, like I was listening to your program with Dr. Sekou Jabi from the Central Bank, you know, when he talks about the structure of finances that we have in terms of deposit we mobilize and shareholders' funds that we hold. So we cannot hold them having just limited avenues to put them in. So what the mortgage market has created is another avenue for this mobilized liquidity to actually go to. And it's post-development, so it has a multiplier effect. You know, by the time you get into this kind of a product, not only does it provide an investment avenue, and with the revenues that comes with it, the gains that you have by providing the service, but also you are broadening your customer base, banking the diasporans, you know, trying to formalize the inflow that came. You know, we also had on that program that during the Corona time, inflows that were coming in, you know, were never witnessed. It was up to 589 million in 2020. Something never recorded in the Gambia, contributing to close to 50% of the GDP. So formalizing the way remittances come into the country is very important. And if you look at it, most of the mortgage products, the greater demand of it is coming from the diasporan Gambians. And then really banking them, profiling them, helping them own a land, and all the related aspects of the development in the construction, as well as both the direct employment and the indirect employment that it comes up with. It's quite a good experience for the financial institutions.
That's right.
I mean, Mr. Book, let's talk about your bank and its involvement in the real estate business. Just take us through the areas that you involve in the real estate sector. And I would just quickly probably ask, would you classify the development of hotels under real estate or tourism?
Good questions.
So you know, you will understand now which areas within this sector, and I will now give you guidance that look, maybe we can have it, depending on your response, where do you classify things like this? Because any business that you do, the real estate arm of it, where is it classified? That's an extension of the question.
Excellent. I think that's a good question. I understand when somebody says it's a good question, you may not have a better answer. But this is what we do. Depending on the sector in which the customer is operating, that's where the classification goes. And to directly answer your question, for hotel development, we are classifying them under tourism. and then but not necessarily construction or real estate. So it depends.
But why?
There's a guide. I mean, there's a guide from the central bank on the kind of sectors that you do. You know, they call it loan concentration by sector. So these sectors are defined. So it may differ from one bank to another, but there is some kind of a guidance that tells you what you classify under what. So if you look at the broader perspectives in terms of improving, for instance, room qualities in the Gambia, where it is most of the finances channeled through that will be regarded as exposure to tourism. You know, someone can argue out that it's actually in the construction sector. Another person can argue that it's in the real estate sector. But for the purpose of what we do and the bank that I work for, when we extend credit, we look at the sector in which the customer is operating, and this is where it is classified. So our activities or our partnerships with the hotels, for instance, were entirely classified under tourism and not the real estate sector or construction sector. Now, on the contrary, when we have customers who are actually operating in the construction sector, then whatever partnerships we have with them, regardless of what projects they're undertaking, now we classify that under the construction sector. So mainly, for us, the classification is entirely on the main business activity of the borrower. You know, not necessarily the nature of the development that is taking place. So from your perspectives, I understand, by the time we looked at it from your vantage point of, you know, the construction bits that get into it, the development bits that get into it, we'll end up having everything under the real estate sector. You know, but our classification is guided by the customer we serve, you know, rather than, you know, the perception of who is seeing what kind of development is taking place. So this is where the classifications are. Okay, but again, the question: what areas, what main areas is your bank involved in? You elaborated on mortgage finance, you know, issuing out mortgages. Yeah. But are there other areas within the real estate sector that your bank is involved in? Yeah, I mean, we've partnered with some of the real estate companies and developers in really acquiring land, for instance. Also in road construction, for instance. We've partnered with different customers in this real estate sector, depending on their need, but mainly, apart from the mortgages that we had launched and, you know, has been really moving, acquisition of land, development of the vital services that needs to be there, you know, before even the development takes place. These are all really areas that we looked at, and then we try to get into, and obviously improving the existing structures, because sometimes, and also helping businesses relocate to better spaces, probably constructing their headquarters. You will see some who will start very small, and by the time you realize, because of their partnership and then, you know, the business opportunities that they took advantage of, you know, they are quickly outgrowing their size, you know, and they want to move into bigger spaces. So we partner with them, you know, in that as well. And also, if they are diversifying into anything that is of that presents an opportunity for them to either increase their business range or just kind of improve their image and the spaces they occupy, yeah, we are quite keen to also partner in that area.
Now, still talking about mortgages, what does your institution mortgage application process involve, and what are the requirements?
Great. I mean, the requirements are not much. When we launched this product, I think we were one of the banks that were offering the lowest lending rate. It still stands at about 13%, if I am right. Although it's a variable rate loan, but we frequently review this. We were taking advantage of the improvement in macroeconomic condition, the expansionary stance of the Monetary Policy Committee in terms of the reduced interest rates. So the sustainability of that, the stability and how entering that macroeconomic indicators, particularly the low interest rate, is very much affects what we do. So in coming up with this product, we come up with an LTV, a loan to value of 75%. That means the the person applying for the loan will approach a developer. And we're not just dealing with any developer, but Taf is one of the main developers we are dealing with. So in fact, because obviously I've explained that it was developer push, and he was one of the developers pushing us into coming up with a product to take advantage of this. So after identifying what you want from the developer, whether you want a 2-bedroom, 3-bedroom, you name it, whatever you want, then we will also assess your earning capacity, to be able to, we want to ensure we don't deduct you beyond what the labor law allows us. I think about 40% of your net pay. But most of those requesting this kind of a product are more or less from the diaspora. You will have very few Gambians who will be able to afford this kind of things, even though it's affordable housing.
Yeah.
We have about, as a bank, almost 208,000 accounts, 88,000 of which are current accounts, and about 17,000 of that are salary accounts. Out of those 17,000 salary accounts, if we consider, let's say, the 2-bedroom product that Taf is doing, you need at least a salary of about 46,000 to be able to benefit from this kind of mortgages. When we looked at it, out of the 17,000 salaries, it was just about 65 of them. Yeah. So just to let you know, if you are very aware of the salary structure in the Gambia, those earning 46,000 must be somewhere in the middle class or towards, in fact, the very high end. Yeah. And then if you look at, those who will be able to afford the sites and services, which is the empty plot, the land, will be about 300 and some, 350 odd number of salary earners that will comfortably, earn at least minimum $21,000, $22,000 dollars. So even though we try to make it, he did well in trying to make it affordable. It's not high end, but it cannot also be a social service. He's into business and with a bottom line to look at. Yeah. So these were key considerations we were looking at. So once we know what you want, you will first of all start with Taf to identify what you want. And then we will assess if we are to give you this and you are coming up with the minimum 25%. So you can subsidize it. If you think you've had more than the 25% we are putting on the table, and you can contribute more than that such that your salary structure fit into the repayment, that's fair. But a classical example is coming up with 25% and the banks chip in with 75%, and then your structure is built and then it's spread over a period of 10 years. So once it's identified here, we assess your capacity, then we process the loan, and then you come up with your 25%, and then we have the different development stages of disbursement that we do, and at the end of the day, the keys are handed over to you, and the title comes to us until you complete payment, then we hand over the title to you. So you can have an expedited route to this payment. You don't have to wait until after 10 years. Okay. You can actually come and foreclose without penalties. Yeah.
Nice.
Well, that's fine. Let me just add further, Mr. Wu. And again, as the leading real estate developer in this country, and the biggest, what we try to do is to be innovative. The facts are there. You've said it. You've said the number of accounts. We know what they earn, what they can afford. I tend to get a lot of people coming back to us, especially on social media, which is the global republic now. You cannot stop anybody, voicing out his opinion.
Republic of social media, yeah.
That's right. But we're quite sensitive to the comments that come out because they help us develop our business.
Absolutely.
So a common question that we always have is how affordable are our houses to, well, I don't want to say poor. I hate to use the word poor, but really poor people. That's the way it's written. Yeah. And I don't think you can ever house the poor. Yeah. And there's nowhere in the world where you can provide private sector-led housing for the so-called poor. I don't want, honestly, I hate to use the word poor. So those people should be targeted, for social housing. Yeah. And social housing, it's not normally provided by the private sector. It is government that will have funds that are for social development, and and so with using other incentives to bring down the pricings of housing as low as possible.
Yep.
And yet still not everybody can afford it. But we think that we want to take up our responsibility, and one of the things that we want to address is access to land. So if we make land accessible to some of them, because most public servants, I would really want to target now the public servants, because you have quite a huge, clientele of public servants, and we know how much they earn. So one, location is important, because I can tell you that land anywhere from here to Brikama, it's more or less almost unaffordable to public servants. There's a premium on it already.
Yes.
So land is bought, from the local authorities, who are the owner or the traditional owners. And there's a premium now. Everybody knows how how expensive land is. So if we are into development, we need to buy land, from these people, and then add value by bringing all the services. And the services that we bring are also expensive. Then our margins. So it is my conclusion that for public servants, we are not even thinking of building houses for them.
Yeah.
We need to go back to the traditional way of access to land. If you look at Brusubi, which I think is over 3,000 plots, some were built, finished, but the majority of plots in Brusubi were sold or given out on mortgage, on a sites and services basis.
Absolutely.
Some of the roads, even in Brusubi, was not even tarred.
Absolutely.
If you go there, it's only, was only scraped as sand. And the reason why they do this is that you want to make the price affordable. So for us, and I would like to use this platform to say that we are looking at land beyond Brikama, and we need to do this, and to address the need for public servants. And we would like to work with banks like yourselves, that let's look at how to help, the public servants to be able to afford or access this land. And one of the ways that probably that public servants need to be aware, because there's also financial discipline to be able to do this. And one way is that, look, equity is always a problem. The initial deposit of 25%. So they must be disciplined to save.
Yeah.
That you must save for your equity. There's nowhere in the world that you go where people give you 100% mortgage. So this is a product we are looking at, and we will approach the bank to see how we can bring the price as low as possible. Margins for us will be very low. It will be seen as part of our corporate social responsibility, where we will not be looking at our normal margins, but very low margins, and then to put the basic in place. Then probably the banks can also look at it as probably part of their corporate social responsibility to make it as affordable as possible.
Thank you so much, Mr. Mbub, for your time and such a very important discussion we had with you. And we hope to have you back on the Taf Hub again. Thank you, beautiful viewers. Till we come your way next week, don't forget to go subscribe on our YouTube channel and follow us on our various platforms with the Taf Hub.
Thank you.
Taf Africa Global presents the first eco-smart city in the Gambia, the Taf City, located between Gunjur and Sifo. It is 30 minutes away from the Banjul International Airport. At Taf City, you will be able to live, work, play, and shop in a healthy multi-purpose community. This vibrant urban environment will meet your everyday needs with commercial, business, recreational, and other complementary services to increase the value of your home. With up to 5,000 units of affordable homes on a 500-hectare land, Taf City will be twice the size of Banjul. Prime location, stunning properties, and amazing discount of 20% for the first 50 buyers. Make an appointment today to secure your property. For more information, please call +220 776233 or +220 376 2333, or you can send an email to info@tafafricaglobal.com. Better still, visit our office at Madiba Mall, Bruford Gardens Estate. Taf City, a green and smart city accessible to all.